The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday. Of course, I wasn't here Monday because of the holiday, and I wasn't here last Friday because it was a taped show, but there was a show that I'd gone through the weekly and monthly chart formations, talking about where the Dow needs to, the S&P, the Qs, etc., need to close end of May, that's tomorrow at 4 o'clock, for the monthly charts to complete, and what parameters we're looking at. So, a great two hours of programming right here at TFNN, 9 o'clock till 10, Steve Rose, a really great show. And then, of course, you get double the fun right there at 10 o'clock till 11 o'clock with Tom and Steve as they go through the markets and what they're looking at and different positions they might be putting on or have on. And then I come on 11 o'clock till 12, the Tiger Technicians Hour. My service is the opening call. That is my daily newsletter, a very comprehensive 6, 8, 9 charts every single day. You don't have to look at them. You just need to look either at the Trader's Corner, the final one that comes out at about 8:35 Eastern Time, and that's the final chart that I show, and on that I show the various positions we have. I show about 12 to 14 bullet points. There's a paragraph at the top, sums up everything that we're looking at. And then I go through the Dow Diamonds. We might have position or not, but I'll show them. I also show the 120-minute chart of the Dow Diamonds with the technicals, the MACD, the stochastic, etc., as a separate entity. I show the Dow Daily as a separate entity. But right there on that list, you've got the SPY, the TLT, that's the Lehman 20-year T-bond fund, the GLD, that's the Spider Gold Trust. You've got, and then all our positions. In fact, we have a very interesting position. Right now, there's a conference call going on, but it's a stock that we've been short for quite some time, a couple of months. And we identified here, right here on the show, that I believe that it had completed a hat-trick top. That meant that I was getting a short-term sell on the daily. The weekly was about to give a sell signal. But most importantly was if there was a lower high bar, the monthly would give a sell signal. And that would say we've got a hat-trick top, a top of consequence. That is a top of time and price. We will see if that's going to pan out because there's a conference call coming out already. It's down 4%. It was down 6% earlier on. And we were short just over 51, trading right now at about 45.80. It was down to 44.20 earlier on in the day. Now the conference call is going on between 11 and 12, but I don't care what they say. There is a real good chance that this stock is going to start having a tough time. Already the earnings are lower than they were from the last quarter. So now what's interesting also is that we went long today. We went long a particular stock that I thought we had missed out on a really good entry point. We did, actually. We missed out on a very good entry point. To tell you the truth, it's in an industry that, wow, you would think out of all the industries to be hammered in this particular market environment, this is the one. But in fact, it's held really well. So this is a single leg A up, pull back today. We wanted another pullback. So we've entered. It turns out to actually have been, I believe it's the low of the day, the exact low of the low ticker of the day. I'm always suspicious when that happens because I have an expression. As you're patting yourself on the back, that's when you hit the tree. As you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. Now, I don't believe in the trading gods. I actually believe that the trading gods are your own inner psychological framework, your inner machinations, the inner thoughts. So it really shouldn't affect the stock or anything that you're looking at, but it does have a little bit of a psychological impact in that of tempted fate. But in fact, so far it's now up about 10 cents, from about 8 cents, 7 cents from where we bought it. So we'll see what happens. Now let's go through what I'm looking at in the market. Oh, and one of the reasons why I bought it is that I'm going to be going through this in great detail in my all-day webinar, 9 o'clock till 5 o'clock, a week from Friday. That's June the 8th. There's a special going on. It actually, not only does it save you $200, it gives you free access to my webinar on moving averages. I'm really proud of that. I think that was a really good webinar. Discussing the moving averages, how I use them. I don't care how anybody else uses them. This is how I use them, and I'm happy with the way that I use it because it produces results. You also get 1 month free of my newsletter. So when you think of the savings that you're getting here, it's really a very minimal cost, this particular webinar. And think about what you're going to get. We're looking at market timing. We're looking at learning how to draw two trend lines. There could be diagonal lines. There could be horizontal lines. There could be two lines that turn out to be the outer perimeters of an up channel or a down channel. There could be the definition that I call an inside track, and that inside track is where you use I got some great examples of it. I'll go to them in a few moments. But it's where you use the outer points of the wick, the tops of the candles, and then within it, I usually say about 3/16 or less on your chart. I draw another dashed line, and that can become a repellent line. If it's at the bottom of the up channel or the down channel, I draw another dashed line on the inside, and that becomes the propellant line, the zone. And it's really important, just such simple techniques. I'm going to show you how to use arches. Now, I know some services don't allow you to arches. You don't have to use the arch because all I'm doing is I'm going from the left side. If you look at the Dow chart, I'm showing right here at Tiger TV. Look, 12,734 was the low on the 6th of March. Look at the time sequence. You go right to the low of the 10th of April, 12,710, and then that same distance of time, in this case bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 20, approximately 24 bars. You can go, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, and it almost touches the line. It bounces 25, 26, boom, 27. No, it must have been 27 bars. I got interrupted by that telephone call that I thought was coming along. Oh, it's from Washington. How about that? Washington's calling. Okay, so what we're looking at, it breaks down. So I show you the arches because it was important. I'll show you the left side, right side price time match at the top. Look at this. From the 13,297 high of the 2nd of April, pulls back, and then it makes a peak B, and I'll show you where to start those time matches, price time matches. So I use the peak, and from that peak you go left side, right side, exact time price to the exact day. On the 1st of May, 13,338, plop, it comes down again. So now, this is what I'm going to also show you. I'm going to show you how to use round numbers. You remember the Apple chart? You remember when Apple made its round number high on the 10th of April at 644.00? And I was on with an interview with Tom. I actually did on my show as well. I said it's come down to 555, round number. It filled the gap, and then it bounced to 618. And I said there's a real good chance that 618 won't be broken to the upside. If it does, 624 will probably be a strong resistance. But 618, if it pulls back from here, it's going to retest in an arch formation, the left side low of 555, and then it should pull back. And that arch formation turns out to be the pattern that I call the dreaded H. It looks just like an H. Look, it comes straight down, 644, boom, to 571, makes an H formation, 1 bar up, pulls back, makes a lower low, goes to 555, makes another H pattern, and then it breaks below 555 after trying to support, hold support. And when it does, it slides right down to where a diagonal trend line support. And that diagonal trend line is something else that I'm going to teach you. So there are so many things that they're really simple techniques. In the very beginning of the webinar, I'm going to teach you about the ChapmanWave, just the notation, that is. And what does the notation wave do? The rotation wave says that from a most identifiable lowest bar, you should have, if all the technicals are in place or if the chart pattern is going to permit, you should go to at least a peak A, a higher peak, which will be B, a higher peak, the letter becomes capital C, and a higher peak D, uppercase D. And that's when you've got to be careful. And I can show you dozens of charts. In fact, I'll show you some right now. I'm going to show you, I think it's Home Depot that's made many peak Ds. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter. Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the Money Game. Studies show that 3 out of 5 people are afraid.
Hi, everyone. everyone, we're back. Basil Chapman, Tiger Technicians Hour. Dow's down 137, S&P's down 16, Comp is down 33 at 28.37. You got gold down 2 at 15.48, silver's down 18 cents at 27.61. You got high-grade copper's down 8 at 3.38. Oh, that is not good. Crude oil is at 87.86, down almost $3, and bonds up 1 and 23.30. So this is going to be a fascinating close today. Let's just go back to what I was talking about. I spoke about peak Ds in the ChapmanWave being really important. Look at Apple. Apple made the peak D back on June 10th, June of 2010, 279, pulled back for just 2 bars, started a brand new buy mode, made an instant restart. That's another technique that I'll be discussing in the webinar coming up. And then it goes to parallel wave count E/A, F/B, and then G/C, and then it makes that requisite peak D, which very often happens in an instant restart at 644. So this is a chance that Apple is making a high-level consolidation. It's going to test the 520 to 500 area at some point, which will be the 9-period moving average in the monthly and the up channel support. But I was talking about Home Depot. If you go all the way back to, was it Home Depot? I guess it was Home Depot. A, B, C, D, E, F, G. Okay. No, it was a Home Depot in the weekly chart, was it? I was doing work on this. Yes, in the weekly chart, there are numerous peak Ds. And the last one with the Doji peak D in the weekly at 52.88 is really something to watch. Why? Because it's pulled back very sharply. It's been one of the great stocks, the outstanding stocks, and that's something to watch very closely. Then I also look at round numbers in the work. I showed you the Apple round number high and the round number that it bounced from and the round number resistance. So those are techniques that I use. Now, let's just go. I want to go through this very carefully. The Dow. We won't talk about the monthly chart because that's going to be Friday. When I do the show Friday, we'll have finished the month at 4 o'clock the day before. So we'll talk about those monthlies. But this is really quite key to me. If you're looking at the various indexes, you will see that the Dow, when it made its top, the MACD and the slow stochastic pull back very sharply with a wide beta, with a wide distance between the yellow line, that's the fast-moving average right there, and the red line is slow-moving average, that's in the MACD, the moving average, convergence, divergence, a lot of words, just a series of moving averages, exponential moving averages. And the slow stochastic failed to hold above 80%. That is just deathly, especially when you get the MACD confirming a peak D top, and you start to pull back very sharply immediately. And what's happened is we had those, what was it, 14 or something, 13 out of 14 days before there was a bounce, and there was two sharp days up, then the doji and a pullback made a lower low, and the Dow went to 12,311. That was the low on the 23rd of May, and now it's trying to rally. We've taken out yesterday's low, and in fact we are testing 12,421. So we've broken Wednesday. What's today? Thursday, Wednesday, Friday. We've broken the lows of the past 2 days. That's a sign to say be careful. Another thing is the stochastic failed to rally. It's only at 27%. Look what happens when the slow stochastic really does rally. You get a pretty good move. That's the power of the inside of the workings, the machinations I'm going to teach about how this look-back period, and when you go through the webinar on the moving averages that you get for nothing, you will learn about the power of this look-back period that tells you why these moving averages are so important. Hey, there's a line right there. You see that 200-period moving average right there? Look, it became a target. It became a repellent zone as it couldn't hold. Then it became a target again. Yesterday it became a propellant zone to cross the 9-period exponential moving average. Today it's back. Look at the magnet of this particular line. I'm going to open this up as wide as I can. Look, when you're studying these charts, you will find that you can take some of these moving averages and you do nothing with them until they become important. It's like a gap. Do I care about a gap if the price is a gap up if the price is moving higher? No. Start to turn around. That gap becomes very important. Well, the 9-period moving average was resistance, became support way back in November of 2011. And then by January the 19th, it took off right on that line with a technique that I'm going to show as well called it's actually an expanding wedge, but I call it the falling X because it looks just like an X. You go straight up, and then you got your two blade. The blade has lower highs and lower lows. When you break it, that's a very powerful move to the upside. And I'll show you some other things about the moving average. So that's very important. Now, let's just go to, I'm going to stick with the daily charts. What I wanted to look at, Tom was discussing, and he had an interview talking about Harmony Gold Mine. Now, I might be wrong, but if I remember back on the reef, the Vaal Reef, where I grew up as a teenager, and I was born in Cape Town and lived in the most beautiful, beautiful, beautiful city in Sea Point, a little suburb of Cape Town, right on the water. I used to, from my bedroom window, I used to, as a little kid, I used to be able to see Robben Island. Eventually that became a prison where Mandela was, not in the time that I was in South Africa, though. And so I moved to a little mining town near Johannesburg, and I'm sure that Harmony, one of the mines there was Harmony. Now, Basil refined gold as a kid. You know, it's a funny thing. All I did is, my grandfather once had a stone crusher. When these mines are dug, so someone has to take those big rocks and make them into smaller pieces so they can be used for different things. And my grandfather, one of his businesses was to have a stone crusher in a little mining town called Springs, next to the town that I eventually came back to, which was came to live as a teenager just for 5-6 years for high school. And that was called Brakpan. That's Brak meaning bracken, like bracken. This is kind of sloth. It's kind of stuff you dig up. And pan is like a little pond. And that actually came from water that was used for the mine. So what we used to do is to go play in the mine. We used to go play. I had good friends whose parents were miners, and whose father, was a miner. And we would go play there, and that's all we did, play. I didn't know anything too much about that. About gold and mines and things. All I knew was to play there. So, back to our story. Wow, was that a break? Yep, that's a break coming. Harmony Mines, I'm going to show you something that's very interesting. As far as the technique that I'm going to be teaching, the left side, right side, price time match, look at this. It's so fascinating. I'm going to open this up and you'll see this chart and you'll see exactly what happened in the weekly and where we are. I'll be right back. Basil Chapman, 877-927-6648. Love to take your calls.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Okay, I had a question then about the IBB, the NASDAQ Biotech Index. I'll be there in a second. Let me just finish my thought here with Harmony. HMY is the symbol. Harmony Gold Mining, South African gold company. And I gave you a little story there about me growing up right near the mines. Yes, I did go down a mine. It's one of the most awesome experiences in fear that I'd ever had. You go down a mile or more than a mile, because things have changed now, but it was a long time ago. And it is just a frightening. These little wooden stumps from trees hold up the ceiling of the cave that they're digging. One little slip, but you're gone. You're just gone. It was an incredible experience going down a mine. Okay, so this is a story. Harmony makes a low at $8.73 in the weekly chart back in February of 2010. 58 sessions later, it makes a peak E with a particular candle that I like. It does go squeak to a slightly higher PF, but I use the peak E as the left side. So this has got 58 days. I think it's 58. And then exactly 58 days later, what do you do, especially because you've got a diagonal inside wedge that goes right to the same point? Right on the week of the 18th of May, it goes to $8.64. That is only 9 cents lower in 120 days. Can you imagine 120 days and you get to that exact point? Already, I'd actually drawn this, I think I drew this about 2 months ago as a potential. Didn't say you could get there. He just said that was the potential. Plop, right there. So now look what's happening. The stochastic's trying to rally. It's rallying from way down to about 5%. Let me just double check. 5.98%. And it's only at 14.85. So this is what I anticipate is going to happen. Harmony is going to be repelled by this 9-period exponential moving average a couple of times at $9.88. Made a high today of this week of 964. It's going to come back under it, go over it, maybe try maximum I see is $10.63. Actually, I don't think it'll get there. I think it'll probably go to about $10.25, maybe $10.32. And then it's going to do a retest. And the candles, those candles, I'll be teaching about these different candles. These are the most important candles that you could be looking at right here in terms of potential trend changes. And then you get 2 bars in which for it to succeed or not, and then you're going to look for something different. So I'm going to be teaching about that as well. So you've got a Harmony made some kind of a bottom, testing the 870s, 860s. Now what's happening is that it's making a bit of a rally. Monthly chart is still very poor, but attempting to find some kind of support, and the $10.42 is the 200-period exponential moving average resistance. Maybe it can get there. I'm not sure if gold is going to suddenly become a currency of fear, as it had been once before, especially with these the European crisis. But this is interesting. Coinciding with it weekly, you've got the same kind of candle, very interesting candle right there on the 16th of May at 864. It bounces and goes to leg A, doji. The second day, it doesn't break the high on the first day of 994, but it does the second day, but it doesn't close above it. That says you've got to now test the low side. So it breaks under today, breaks under 959, the low of the 24th. And now it's trying to get back in. Why? Because a wide-angle doji, a long-legged wick, becomes a magnet. So this is what we're looking at. There's a chance that Harmony is going to attempt try to get inside the body of the candle of yesterday into the 970s. This is at 964 right now. The stochastic and the daily is at 85%. That's good. And the MACD is doing quite well. So yes, this has bounce potential right here. Now, I was asked about the IBB. The IBB is not IBD, the Investors Business Daily, but it is the IBB for Basil. iShares Nasdaq Biotech ETF, and it's trading right now at 124.50. Very interesting chart. Why is it an interesting chart? Because the monthly has had a recycle of the peak C1, C2 highs that it made back in 2011, and it's gone to leg D, and leg D is continuing this month at 126.65, 126.90. It extended it, so you can't get a peak D until next month. That means if there's no new high in June, that is on Friday, we could even see a little pop to the upside that makes by 1 penny a new high. That means you can't get a sell signal, a peak D sell signal, until that would take it to July. So that's how important looking at peaks is. If you look at the weekly chart now, this is going to be very interesting. It's had a high-level consolidation, making a potential oval formation. Right there. It's actually even a larger oval formation. And that oval formation says very simply that there's an alternate wave count. The MACD is declining. Stochastic looks terrible. There could be one spike to make that requisite leg D above 126.90. It doesn't have to do that. But it does say that it's having a very strong, as I call it, a high-level consolidation. And that makes the 119.42 to the 116 area over the next 2 months really important to hold. If there is a new high, you need to see the technicals confirm it. Otherwise, it's going to be coming right back into that oval formation. So the question is, what about the IBB? I was asked. I believe that the IBB is having a high-level consolidation even in the daily chart. It's made an A, B, peak, C. Oh, it's made a full, this is a full count to the upside. Look, it's unbelievable how many times charts go to a D and then take a timeout. And I bet that if Larry or Tom or Steve or anyone who's using either Fibonacci's or looking at the potential for garters or butterflies, they will automatically look at this and say, oh yeah, that's right, this is, and they'll name whatever technique it is, because this technique is applicable anywhere. Oh, look at this. This is the daily chart. It's made one. Look how important a peak D is. From the I keep going back, and there's still more. If you go back to the low of, where are we? If you go back to the low of October the 4th, 2011 at 87.67, you made a buy mode to peak D on the 27th of October, pull back. Started a brand new buy mode. You made an instant buy mode that started on the 18th of November, went to peak D on the 3rd of January, pulled back for 1 day, broke to a new high that's called the ChapmanWave Instant Restart right there. And what does it do? It goes to a brand new ABCD, another peak D. So you've got, now let's see what we've got. We've got, I bet, what is that? So this is A, B, C, D. This one went to E and F. Okay, so the very first one that started back on the 80, 84, 83, 96, back on the 9th of August, went to peak F. They can do that as well. And then after that, you got 1, 2, 3 to the high of the 7th of March at 122.45, pulls back in 3 waves to the downside. Then it goes to another peak D. Where to? 125.26 on the 3rd of April. Where does it pull back to? It pulls back to 116.43 and makes yet another one. So that's 1, 2, 3, 4, 5. That was an F. So 5 from October the 4th, IBB, the iShares Nasdaq Biotechnology ETF has made 5 peak Ds to the upside. At that point, you just have to expect that you're going to have some kind of a consolidation. After all, it's had a whole series of buy modes to higher highs, and in most cases, higher lows. So at this particular point, what we're looking at is if in the next 2 weeks, 119.95 is taken out, close below it, you've made the H formation, and you're probably coming down. I would say that if the IBB starts to fail, it'll absolutely come down to the 112.65 level. But so far, I can consider it only as a high-level consolidation. So I hope that helps you, and that was a question from one of our dinners. Now, let's do something else. I had spoken about different chart formations. Some of you remember that I was looking at the UNG, and I said the UNG is starting to make a bottom. I believe it could go to a peak D. Well, it went to a peak D. Now, look at this beautiful UNG is the, what exactly is it? It's the Natural Gas Fund, USO Natural Gas Fund. So now look at this. What it does is it pulls back, and it goes to 14.25, and then from the high bar that I chose on the 19th of March at 18.86, I drew a left side, right side price time match. And where does it go to? Ta-da! It goes to that exact price and then peaks above it at 19.76 in exactly 1 bar early. So, it didn't get there on the exact bar. It got there 1 bar early. But that's how these left side, right side price time matches can work. And look what happens. It goes peak A, B, C, D. There's what I would call a potential instant restart, but you've got to have a parallel wave count because the fast, this is something else I'm going to teach. You see the fast moving average of the MACD right there? It breaks out on the 23rd of April. It could have held you in that particular position because the stochastic was holding above 80% all that time, and it went peak A, B, C, D. When it got to D, there was no hint that the fast-moving average of the MACD was about to turn down. Instead, it held beautifully, and it took you, and this is a particular instance, when I teach my Master Trader series, when we've got usually 2 days, sometimes even 3 days of intensive 9-10 hours a day, I can take the time to explain the difference between what constitutes an instant restart that has the potential to go to a brand new ABCD to the upside, or one that says, hey, I'm only going to go to F, but it's going to be really sharp. And this is exactly what happened. We went to peak F, the 6th highest peak on the at 19.76. If you're looking at the charts, you'll be able to, I'll make it a little bigger. I'm looking at Tiger TV on my cell phone. I'll make it bigger. There you are. You see what happened? It held that 9-period exponential moving average all the way. In fact, from the day it gapped up on the 25th of April, UNG did not once close below the 9-period moving average until it had completed peak F and the pattern that I call the dreaded H, the lowercase h. Are we going to have such fun in this particular webinar? And I'll explain why. Because I believe that we are in, this summer is going to be one of the choppiest summers. It doesn't have to be a huge range just yet, it looks like. But it is going to be so choppy that you're going to be able to very short-term trade. I wouldn't even call it swing trade, but you're going to be able to short trade using some of these techniques that can really benefit you. You go in and you go out. You go in and you go out. And you can do it over and over again. Not only that, I'm going to teach about the rectangle formation if it comes up. I hope it does come up. This rectangle formation can hold between a range for much longer than your patience. And you keep trying to trade this, but unless you're short at the top of the line, in this case the E-minis that I'm showing, right there at the 200-period exponential moving average at the 131 to 134 area, and then wait for the 1312, in this case 1311.75 area to be tested. The moment you start to get a second bar on this 120-minute chart above the low and above the high, you start new leg A, you might be seeing another little trading range start. And that's going to be very interesting. The action today so far, and I've spoken about this very often, I will be showing you what you might want to add to your tools. For my subscribers every day, they see this chart with 5 windows. On the left is the 120-minute chart for the Dow, and I discuss it in great detail and I give parameters and the chart patterns. Look at this down channel that we were looking at right there. See the down channel? Look at the left side, right side, price, time match. We're hardly ever surprised by action in the market because we're kind of anticipating that those are the parameters that we're looking at. So what's going to be very interesting is I said if the volatility index, the VIX, holds in the 23s today, selling pressure will be maintained. The moment it starts to decline, you will see some kind of a rally, at least a rally attempt. The other thing is that I'm going to teach about the short-term trading index. Look at the way this trading index is given such nice readings. When it's up at the highs today, the high is 265, you're real close to some kind of a rally attempt within 1 to 2 days. When you start making lows, look here down to 0.38, 0.29, that says be careful because regardless of how high the futures are pre-market, there's a good chance you're going to have some kind of a rug pull and a slide to negative action. So those are the things, my webinar on the 9th of a week from Friday, an all-day webinar from 9 o'clock to 5 o'clock, discussing these techniques and discussing what I'm anticipating based on the chart patterns that we study so carefully in the market, on the Dow, how I show subscribers every single day, this Dow chart with the different techniques we're looking at, inside wedge, left side, right side, cup formation, mini double top formation, Roman candle, ChapmanWave Roman candle right there. This kind of ugly candle that you're looking at here, how important not only is the 200-period exponential moving average, as you can see in this particular chart, but how important it is to monitor those particular candles, how this long wick, it almost looks like a spider leg with a little doji right at the top there. What does that mean? And what would say to you that you're going to fill the entire 12,311 wick of the, what date was that, of the 23rd of May at some point? Those are the things we'll be discussing. And what kind of chart patterns to look for in the month of the rest of June and July and into August. So Basil Chapman, Tiger Technicians Hour, Dow's down 153, S&P's down 70. Hey, we've got time for calls at 877-927-6648. We'd love to hear from you.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful ChapmanWave. Well, Basil has just announced a one-day online master trader course where he'll explain his ChapmanWave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Dow's at 145, S&P's down 16. I had a question to Den, and then we're going to go to Ben in Tallahassee. Just one quick second. Amarin Core PLC. I'd spoken about this the other day, and I'd also mentioned the different parameters. It is holding the 200-period exponential moving average. It's making slightly higher highs and slightly lower lows, slightly higher lows, and that's really important. This is leg D in the daily, but it's at 11.91, only down 35 cents. It is 2.88%, but this is a very nice chart pattern. Something's going on with this stock. What I would say is, if you're long, some of your position, I would definitely put a stop 1 penny below the little trough that was made at 10.96. That was 29th. That was yesterday at 1:30. So take that out, I'd be real careful because it's going to retest the 1060. But so far, this is a really nice action. If there's any positive action late this afternoon or tomorrow, if there is, then this should retest the high that it made of the 1280. 1280 that was yesterday, and the chances are that that it'll not only improve the daily, but that weekly will then make, if it makes a new high, that's a leg F in the weekly, but actually that action is really good. Some part of it have a bit of a tight stop right there underneath that, as I said, 1 penny below, or now I can't remember, I think it's at 1063, and try to keep a core position. And that would have to have a stop around about 10:20. But so far, I have to say that's very nice. Let's go to Ben in Tallahassee. Hi, Ben. How are you?
Good, Basil. How are you doing?
Very well, thank you. You want to look at?
Yeah, in the IWM, I didn't get a chance to listen to the show if you already talked about it, but given the little time we have, can you confirm that isn't a leg
B?
Or it made a peak B, right? Or is it leg D?
91. It's made a peak B today if it doesn't if it doesn't go above yesterday's high. Number one. Number two is the 200 period exponential moving average, which was beautiful support in the 78, 77 area, is now resistance. So this is a very, at this particular point, we're looking at a pretty dangerous market because there are isolated cases of strength, but there are many more situations where this could turn ugly. Now, this is what I'm going. Are you looking to do what?
Well, I was just going to say, and maybe I just looked at it real quickly this morning, but I thought in the daily it bounced off the 200 EMA. Is that not correct?
No, the 200 EMA is resistance at 77.78. So it went up to it yesterday, couldn't hold above it, and they got repelled. So this is what I'm.
Looked at it wrong then. Yep.
It's the weekly chart that says to me you've got to be careful in the monthly. Now, what's happened is that if all of next week, going into next week, if IWM, the Russell 2000 ETF, does not close below 74.41, besides being fantastic because everything about it says it should, that'll be really good action to say, you know what, we could continue this high-level consolidation a little longer, but if in fact it starts to break down and it decisively takes out the 70. If it breaks and closes under 74, 71.27 would be the 200 period exponential moving average of the weekly chart. So far, I don't see anything positive in the weekly. In the monthly chart, I do see some strength, a little bit of strength in the day, but the stochastics at 45%, that's not good. So this is the potential for a short. I would love to see legs C and D. In my webinar that I'm doing a week from Friday, I'm going to show something that's quite fascinating, how there's a volume climax that you can actually use as a trade. We had a volume climax in the SPY at 131.60 on the 18th of May, and that's given a very nice bounce. This bounce theoretically normally would go to a D, a C and a D, so this is going to be really important. If we close ugly on the day and we're ugly into the close tomorrow, that's not a good sign at all. Hope that helps you, Ben.
Good, thanks, Basil.
Thank you. Folks, stay tuned for Larry Perseverance. I'll be back on Friday. My service is the opening call, and please look into that webinar on the 8th of June, Friday the 8th of June. The Dow has to hold 12,300.